Welcome back to watching Business Incorporated live on Channels Television. To our next conversation now, the International Monetary Fund has revised upwards the 2023 growth projections for the DRC to 8%. For analysis now, we have Matt Kindiger, practice leader, Sub-Saharan Africa, front of you, join us via Zoom. Great to have you on the show.
Hi, thanks for having me on the program today.
So do you expect DRC's upbeat growth to continue this year?
Well, certainly, yes. We have actually revised up our growth forecast for DRC, and we do expect it to be one of Sub-Saharan Africa's best performing growth markets. We're actually advising our clients to consider whether there are opportunities there because of the strong performance of the economy. Growth really is predominantly a story of upbeat mining activity, especially in the copper belt, from copper and cobalt. Not only are high prices supporting output, but we're also seeing new investments into the sector as well. We have quite an upbeat longer-term view for the market, especially because of very strong demand for electric vehicles and associated battery technology, for example. We are also seeing, in general, the IMF say that the exports and public finances are actually likely to improve over the next year or so. So certainly we are expecting the economy to perform quite well in 2023 and perhaps into the middle of this decade.
Are there any risks, foreseeable risks to this forecast?
Yeah, so I mean, the biggest risk at the moment is the potential for conflict between DRC and Rwanda. Although it's not part of our base case, for the outlook for the market, we do believe there is a 35% risk of some sort of conflict or full-scale conflict emerging between the two countries. It is a downside scenario, but we have seen accusations escalate between Kigali and Kinshasa. Certainly this would affect investment into the country. It could also affect the operating environment for businesses. Although in our view, a conflict, if it were to happen, would likely be concentrated in the northeast of the country. It wouldn't directly affect the mining heartland of the south of the country or Kinshasa, the commercial capital, but certainly it is a significant risk for the outlook.
And definitely we can't talk about the country without talking about the currency. How do you see the franc performing, especially as the country is facing an election in December this year?
Yes, so the election in December this year certainly will contribute to volatility of the franc, and also we're likely to see considerable foreign currency shortages emerge. And this is because the central bank, the BCC, has been intervening quite heavily into the foreign currency market to ensure the franc stability. The franc really hasn't moved very much against the dollar since mid-2020, and so we do think some more volatility is inevitable over the next year or so. However, that said, the degree of depreciation that we're forecasting this year is likely to be limited, and this will be because high commodity prices will drive exports and forex revenues into the market. But as we get closer to the election, especially in Q3 and Q4 of this year, we are much more likely to see some more depreciation on the currency, and if not, some more severe foreign currency shortages to emerge. So the election does play a big role into the outlook for the currency.
Now, you did mention rising tension between the DRC and Rwanda. Any chance of de-escalation? And if there's no de-escalation, paint a picture of what exactly can happen to the economy?
Yeah, so our view is that the best route to de-escalation is likely to be East African community-led talks, although they haven't yet yielded any results. They're likely to be ongoing, and we do believe that there's going to be, both sides will pull back from the brink, and there will be some kind of peace settlement. Not necessarily a lasting long-term one, but it will avoid the worst outcome, which would be a direct conflict. In terms of the impact on the economy, so certainly there would be a negative effect on sentiment. We would see, as I mentioned, we are expecting more volatility of the franc, but there would be even more pressure on the currency in the weeks and months following the outbreak of conflict. And certainly the northeast of the country would be very severely affected. We are already seeing militia activity there. It's quite an insecure part of the country, so certainly there would be economic activity in that part of the country would be negatively affected. But our base case view is that Kinshasa would not be directly affected at all, actually. So commercial activity in Kinshasa would more or less continue as usual. And also the copper belt, the mining regions of the country in the southeast of the country, quite happily would be relatively insulated from a direct conflict, at least initially. So we would see that the direct economic damage of a conflict between Rwanda and DRC would be limited, at least in the short term.
All right, we'll keep tracking those economies. Thank you so much, Matt Kindiga, practice leader at Sub-Saharan Africa Frontier View. It's great having your perspective, and enjoy the weekend.
Thank you. You as well.